So is now the right time to be fixing your loan? Well, one thing I want to talk about today is to try and explain to you how fixed rates work versus how variable rates work. Now, the first part of this story is variable rates, which is obviously the rate that we see changing when the RBA does their cash rate decision, is what we set those variable rates on, and so they can fluctuate. Now, fixed rates, however, are set by the bond markets, or the 3-year, 5-year, 10-year bond rates. Now, what we've seen globally is a lot of countries printing money and a lot of central banks printing money because their interest rates are so low, but they still need to stimulate their economy. Now, when you print money, you basically need to then invest that money or have that money pushed out into the marketplace. And what that's done is it's collapsed the long-term bond rates. And what that means is that banks who are going to be lending money on a fixed rate term can go out there and buy that money very, very cheap. And so that's why we're seeing fixed rates also come down the same time as the cash rate or the variable rates coming down as well. So we're now at a stage where we've never seen rates as low as what we're seeing in the fixed rate side of things. And we're certainly talking to our clients about whether it's the right time to fix. Now, people sometimes in these sort of situations when the variable rate is looking to potentially go down again, they start to get a little bit greedy and they try to pick the market. Now, I've been doing this for over 10 years now in terms of looking after clients and their mortgages, and I can tell you it's crystal ball stuff. So are rates going to go down again? Maybe not. Maybe they will. How long will they stay down? We don't know. So from that point of view, I always say to all clients is you should be fixing a rate, fixing rates now, or a percentage of your rate now, because they are lower than they were during the GFC. So I would be looking to fix a portion of that loan now. The other time I would also say to clients to fix is when their budget needs it. So in other words, right now, people are sort of saying low standard variable rates and low variable rates, it's not putting pressure on the family budget. But by the time you start thinking it is putting pressure, those fixed rates would have moved higher as well. So don't be too greedy. Start to sit down and talk to your advisor, talk to your broker about whether it's the right time to fix a portion of your loan or fix even more than that, but keep a variable portion as well so you can use your offset account. So my message today is fixed does make a lot of sense. Those 3 and 5 year fixed rates are exceptional value at the moment. Will they come down a little bit lower? I don't know, but if it's 20 basis points now that you're sort of thinking and umming and ahhing about, well, in reality, if rates move up to 6% in 3 years' time and you've got a 5-year fixed rate back down at sort of 4.6, 4.5 range, seriously, you'll be clapping your hands about the benefits and the savings you'll be making for your household. So it is a good time to start thinking about fixed rates, and I'd be saying take the opportunity also to speak to your mortgage broker about looking at alternative refinance options. So your lender may not have a competitive fixed rate in the market, but others do. So come and talk to a professional and licensed broker. And of course, we'd be happy to hear from you if you want to talk to us.